So which is it, right? I'll give you a little tip in that the majority of my clients fall into capital gains loss, and that is most people's case scenarios. There are, of course, some exceptions here, and I will talk a bit more about that. But first, let's go into business income. You really need to understand on CRA the definition of your who you are in order to then classify it as business income. And again, don't get confused with the barter rule, because you could be a business and have business income and you're not a trader or a dealer in securities as it's stated here, but you're going to claim it as business income because that's how you actually received it. You didn't not receive it as a capital gain. It won't be taxed as a capital gains loss. So unfortunately, there's a little bit of confusion with that kind of wording, because always think about the activity and the intent, and that will help to clarify where you are standing with your crypto assets. Now, when you're disposing of it, your crypto assets in a way of capable producing gains. And now the real question is, okay, most of us are probably doing that. We're disposing of crypto assets as a way of producing gains. I would say, yes, I do that. You're most likely doing that. Similar manner to a trader or dealer in securities. And the next question is, so am I behaving like a trader or dealer? What's the definition of a trader or dealer? And CRA has identified it actually on their website explicitly that they must have these factors. So the first is frequency of transaction. You have a history of extensive buying and selling of crypto assets. So again, what's extensive? It's essentially a lot of ins and outs. Usually day trading is a very clear, but a person who trades monthly could be, could not be. It's hard to say. So you kind of have to work with your professional and find out whether you can fall under that frequency of transaction. There is no number. There's no 100 transactional lines is infrequent and 10,000 lines is frequent. It's a high probability that 10,000 lines is frequent, but 100 lines could be as well. So it is not clear cut. And this is sort of the gray area of the regulation as well. The period of ownership, you hold your crypto assets for a short period of time and you turn them over quickly. So if you're actually holding for long periods of time, and majority of my clients do hold for at least 1 year, or they move it very slowly every, 4 months or so, where only when the market is moving. And then they might not move it for 7-8 months. They don't fall into they don't meet this requirement. Their knowledge of the crypto asset markets. You have knowledge of and experience of the crypto asset markets. I feel this is, again, a little bit vague. What volume of knowledge do you really need? You don't need much. There's so many YouTube videos you can get started tomorrow and buy some ETH and get on a platform in 30 minutes, to be honest. So what is the knowledge? I guess the more extensive knowledge you have, you could say that you're closer to a trader, although there is so much to learn. So I don't know. I kind of a little bit find that a little bit unclear. Time spent. You spend a substantial part of your time studying crypto asset markets. Again, what's substantial? If you work a full-time job and you have a family and kids and you still have your investments, is that a substantial amount of time? For me, not really. You work a full-time job and you have a family, and yes, you have assets that you do probably as your hobby, spend a few hours every week, but it's probably not your full-time job, and therefore most likely won't be business income. Financing, you finance your crypto asset purchase by some form of debt. That is, again, a very interesting one. Most don't, but if you do, then there is a chance of it that you're most likely a trader. And advertising, you advertise that you are willing to buy crypto assets. Again, kind of an interesting factor, not really maybe all that relevant, but it's there. So let's continue with, then, if you're not doing business income as a trader, then what are you? You most likely fall into the category of a capital gains loss. Now, if you have capital gains, it's known as a taxable capital gain. You're taxed at 50%. That was like what we saw in the example there just a little ways back, where he had realized $2,000 in profit from selling his ETH. So 50% of that would be taxed. Now, let's say another thing happened and that he actually lost the money. He didn't get 2,000. He actually lost 2,000. He would be allowed to actually claim that 2,000 capital loss, which is really great, because if you are investing in the market year after year, you can use those losses. Maybe 2 years ago, you had some amazing gains, and this year you didn't do so great. You can carry back that loss from this year, 2023, to 2 years ago, and apply that loss to those gains and have a reassessment and reduce your overall tax rate. You can also carry forward the loss. So say you didn't have, maybe just started, and so you had a loss this year. That's okay. Declare the loss. Don't hide it. Declare it. And in the future, you can actually, maybe you get some gains. You can use your losses against it. Now, one of the things you got to remember is that you can't use your capital loss to deduct against income like employment income or your, say, if you're self-employed, business income. Can only be used against capital gains losses. We're doing pretty good here on time. I'm trying to just take some little pauses and allow you to process, because it is a lot of information, especially this section of the regulation. So let's look at a few examples. Business income or capital gains loss. This is a very good one. So I buy 10,000 in altcoins and I hold it for a year. And the next year, I move those same altcoins to a different exchange. I also buy 5,000 in ETH and I day trade with that. Are they both taxed separately? Would one be taxed as a capital gains and the other as business income? So I like to look at it again from each line and start with, he buys the 10,000 in altcoins, so there's no taxable event there. He records the buy price and he holds it for a year. So at the end of that year, he doesn't have to tell CRA anything. Nothing has happened. There's no taxable event. He just has his altcoins. Now, and he decides he doesn't want to hold it on that exchange for whatever particular reason, and the next year he moves it, the same altcoins, to a different exchange. And a lot of people wonder, does that cause another taxable event because I moved it off of that exchange into another exchange? No, it doesn't. As long as it's the same altcoin, it hasn't changed to a different type of token, there again is no taxable event. You just have to document that it moved and continue to hold that buy price, like know that buy price. Next, he then purchased more $5,000 in ETH and day traded. So that's actually really clear. If he was clearly articulating, I'm day trading with these $5,000, it's very likely that it is business income for that $5,000. But the $10,000 in altcoin, if he decides to sell it, say in another year, then it would become capital gains loss. But in that same year, he moved it to the exchange, again, no taxable event occurred. It doesn't have to show up to CRA. Nobody needs to document any of that. It's only when he decides to eventually sell that 10,000 will then be capital gains loss. And so this here was actually a really good example in that, and even the barter is also an interesting example in that it's not so cut and dry, like today it's going to be business income and next year it's going to be business income and the year after that it's going to be business income. It could actually start as a barter, say employment income, change to maybe you use that and turns into business income because you stake it, or turns into capital gains loss because you have then changed the token form from one to the other when the employers gave it to you. So it can actually change through different tax regulations, and being wary of that will help you with your tax planning. And the fees, I didn't talk about that, or any expenses you might have. So if you have fees, those are all, you can actually expense against it. Even on capital gains loss, there is a line for that. If you have a business income, you have an expense area, you can reduce your income that way. And so There are some expenses outside of just the fees that you could also expense if you are actually operating as any other business would be operating.